Industrial outdoor storage is one of the hottest topics right now, so I flew down to Dallas-Fort Worth to tour one of these assets with the investor behind it to get the story behind the deal so you know exactly how you can do one of these projects yourself.
This used to be some office. It was like very dilapidated 70s linoleum. I think they had 3 offices, a conference room.
This is Ron Rohde, a buddy of mine that I met at Bigger Pockets last year. He's a real estate attorney turned real estate investor. And over the last couple of years, he's been focused on industrial outdoor storage, which is essentially a covered land play where you buy industrially zoned land, put a fence around it, put some lighting up, make it secure, and rent it out to trucks on a month-to-month basis. The cash flows from this type of asset can be pretty strong, but the appreciation and the potential for future redevelopment are even stronger. That's why I'm so excited to be walking through the property with him today and getting an inside look behind the curtain as to how these deals actually work.
This is very productive use of space because they can store some tools, they can have high value materials, and then they can have office in addition to their yard storage. And that's really what people are looking for as a single tenant user. They want some office space, a little bit of storage, and then yard storage is the key driver. So
yeah, it's pretty well laid out for a wide variety of industrial uses. The future of real estate is flexible. It doesn't matter if it's office, retail, multifamily. Tenants want flexibility in their space use. So by doing a project like this, you'll have the flexibility to accommodate a wide variety of tenants, which means that you're diversifying your risk on the site and also increasing your chances of finding somebody to lease from you.
So here, this is one of the later additions, and this is, again, super valuable. This is a service bay. We call it maintenance fleet, but the main thing about this is these massive 16-foot roll-ups. You can drive a tractor trailer with lights, with antennas, and it's not gonna clip the ceiling. But having a tractor yard service, and then you'll be able to pull the tractors, the truck part, we call it the engine, and service your own vehicles here. Incredibly valuable. If you're a business that's in trucking, transportation, this is what you need to be able to do oil changes. And these guys are doing oil changes every week, every 50,000 miles.
They're running a lot of mileage on these trucks.
Oil changes, transmission, brake pads, air filters, belts, all the consumables, you need this. And so this is a fully, modern construction. To your point, you pointed out the overhead service. It's got 240 volt power. You can run your air compressors. I was talking to Chad Griffiths, our buddy, and he said the number one beyond location, like physical feature, he just said clear height.
Yep.
Because it opens up so many possibilities, and that's the number one filter for so many tenants is clear height, clear height, clear height. They can make do with 8,000, 10,000 square feet, 14, 2 buildings, whatever, but it's clear height that if you don't have the clear height to fit what they need, like if they have a piece of equipment or they need 3 rows of racking, it's a deal killer.
That 2 extra feet makes a huge difference. I mean, most of these roll-up doors that you see on older industrial product are 8 to 14 feet. And 14 feet is obviously far more desirable, but that 16 feet really is a game changer.
Is huge, yes.
I mean, that's what helps differentiate your product in the market. So how many different users do you, the property is about 5.5 acres. Mm-hmm. You've got the flex building, and then you've got all these vehicles parked out here. How many different tenants or users do you have on this site?
So we have a range of fleet tenants that I will say, like this guy Flores is a fleet, and they've got 10 to 20 to 30 trucks in their fleet, and they all park them here. So we have a couple of those. I want to say 3 quote big guys. We have smaller operators that maybe have 4 or 5, and then we'll have onesie twosies, and those are just your owner operators putting around. They own their own truck. Exactly. So we got to get on them for this. All the vehicles stored here must be operational, must be on 4 inflated tires, non-flat. It doesn't necessarily have to be like registered and all that stuff. I'm not testing whether it can drive on its own power, but has to be stored on all 4 tires and inflated.
That's probably something that you as a landlord want, right? Because it helps keep your property from getting junked up, but oftentimes a lot of municipalities will actually require that based on the zoning.
So we are a truck parking of operational vehicles as opposed to a junkyard. Right. Junkyard is where you have non-operational vehicles, but that just really opens up all sorts of environmental issues. You've got leaking coolant, you've got leaking oil, because when a car is in an accident, That's the concern.
Yeah, you don't want to be dealing with that. So let's break this down real quick. In a subsequent conversation that I had with Ron, you can fit a little less than one 18-wheeler truck per 1,000 square feet of soil. So if you've got a full acre of land, which is 43,560 square feet, you could probably park close to 30 or 40 trucks on that site, depending on how it is laid out. So that will help you run numbers as we're going through this process.
When you have multi-tenant, it immediately escalates the number of conflicts. Oh yeah, this is a container.
Yeah, and the management that you have to put into it.
And so you as a landlord are responsible for resolving tenant-to-tenant issues. You have to play mediator. And so it gave me a good appreciation for running multi-tenant was because these guys are probably the rudest of the bunch, they're quite really crass.
What's the story behind these? That is awesome. Dude, I would 100% drive one of those around.
That'd be the office truck, dude.
Yeah, you probably get at least 2 miles per gallon,
So our property actually extends further along here, down towards the creek. But what I kind of show you is this new construction development. It's an LGE project leased by Holt Lumsford.
Yeah.
230,000 square feet of Class A, and they just leased it.
One thing I want you to take away as we're walking around this site is that there is nothing fancy going on here. It is a gravel covered lot. There is chain link fencing. You've got some LED lighting throughout. And the biggest takeaway on that is that industrial outdoor storage is relatively inexpensive to get open and operating. As long as you have the right zoning in place, so you don't have to worry about going through a rezoning process, it can be fairly easy to get these projects up and going.
If you're looking at truck parking and trying to figure demand, these types of paved facilities do not compete with my product. First of all, these are only for deliveries to this location, so they're not gonna just let people off the street park there.
Totally
they would be
different
charging about 175% more, so we're at, call it 200, 225. These would be 350 or 450. It's a big difference on a monthly basis for our truckers. So I consider if this was a public truck parking lot, this would be the Class A. We're believe it or not, we're Class B because we do have the fence, we do have the lighting, we are improved surface with gravel, and then Class C of truck parking is actually dirt.
I mean, if anything, it actually probably helps your business here because if somebody comes over here and gets quoted $350 to park their trucks, I can just come right next door and ask you, oh yeah, you're half the price? Okay, cool.
Except we're full, but other than that part.
That's a good problem to have. That's the thing about these projects. There are so many value add opportunities. They're just very different from a value add retail or value add office.
You can do anything you want. Just specialize and don't do everything. For me, it's like I'm only industrial, I'm only iOS, I'm only in DFW, but this is what gives me comfort and confidence to, when I see a site that's really good, I can jump on it.
Yeah, I mean, whenever you're getting started, you gotta find something to specialize in, whether that's a geographic area, a product type, your investment strategy, whatever it is.
But I talk to a lot of new investors and they say like, well, I'm looking at industrial flex product in Dallas or Houston or San Antonio. And I'm like, that's way too big. Houston is a massive market by itself.
We've seen all of the trucks, so you've also got some dumpsters as well.
Yeah, whatever we can rent on, this is a great use of the last little corners. Otherwise, it would be dead space. You can't fit any semi-trucks in there, but you can fit these little boxes. Other value adds is, starting to bundle more types of like amenities for them. Mechanic services, oil changes, truck washing. These are all things that they currently pay for, and it's more convenient if they can come on site.
That's a great point of advice for you no matter what kind of asset class you're in, is what amenity would better serve whatever tenants I have? What are they already using? What are they already paying for that I could find a way to provide for them, maybe at a better quality for a slightly less cost, or maybe even a higher cost, but better quality. We started seeing this years ago in multifamily when apartments started offering Wi-Fi as a part of your rental package, and it helped increase their bottom lines significantly.
But we do like the tire removal there, so they know they can just kind of drop their tires and.
Oh, so you handle that for them?
Yeah, we charge them. So we pay like $7 a tire and we charge them $20.
So walk us through some of the value add components that you did. I mean, obviously you can do the minimal things, right? Like just putting gravel into existing holes. And
one of the big improvements that we did was install an automatic gate. That is a 30-foot cantilever gate. It's not cheap.
Is it on a timer? Like, does it stay open all day, or how does that kind of work?
Great question. So on our other properties, yes, I have found that that is the most effective use of the gate, as it has a little module that's extra. On this particular property, I even went through the hassle. I paid for the guy, he came out to install it, and they don't like it. They prefer the enhanced security that the gate closes every time they go through.
How'd you find this site?
Off market, cold calling, texting, email. You know, there's a lot of ways. I mean, social media, like we looked up these people's Facebooks. Maybe didn't message them through Facebook, but we at least looked it up to try to figure out, is this a family guy? Is he old? Is he young?
Reaching out to sellers directly through direct mail is actually an incredible way for you to find off-market opportunities. Check out this video here where I dive into my direct mailer. Were they just tired of owning it, or what was the reason?
Sort of. So they
wanted
they applied for like a variance to do a different type of tire business here, and the city said no. I was convinced of the value, so it's like we pay $2.5 million for it. Feel good. We get a little bit of financing, but it's like 55, 60% LTV. The rest we came up with cash. So we put about $1 million cash, over $1 million cash, and it's just partners equity. So we don't raise money, but I'll just send an email. Say, hey, I got this deal, got it under contract. I got the debt, I'm personally guaranteeing the debt. I'm gonna run it, I'm gonna do the management. I've got staff, I have the software. Kind of, I know what I'm doing, I'm Ron.
I'm Ron Burgundy.
And then people will just respond like, yeah, put me down for 2, put me down for 400, put me down for 300.
So you bought it for $2.5 million. What was your value add budget, and what was your plan coming into it?
That's the thing. So I really didn't have a budget. We did not raise, we did not plan for additional expenditures like right at closing. Our sole plan was to raise the rents right when we took over, because they knew that was coming. Raise the rents, sit on a month, get another month of cash flow, pay the debt, put some in reserve, and then use whatever was left to reinvest back into the property.
This is a great investment strategy if you don't want to bring more capital to the table on the front end, or maybe you can't, or you just don't want to use a loan to pay for any improvements on the property. Just utilize the existing cash flow instead of distributing it to yourself and your partners. Say for the first 6, 12, 24 months, we're just going to reinvest 100% of that cash flow back into the property so we can continue raising rents.
It's not a good answer in terms of we didn't have a budget, but I knew I had a list. I knew a list, I had bids, I knew guys, everything was ready. And so I either could have done it all for $100K up front, or I could have done it over a year.
Over time out of the cash flow.
Exactly.
Talk us through the cash on cash return that you would have if you were distributing, what it would look like today. And then let's dive further into the reasoning behind why you decided not to do that. Because a lot of people are so heavy on, we have to have cash flow, cash flow, cash flow. And it's not always the best thing to increase the value of your property.
As a stabilized as is, we're at about 8 or 9%. Again, we kind of target like 2%, 3% above our debt. And so we're right at there if we just did nothing with the property.
The way that we look at our projects, you know, for every dollar you put into it, you should be getting $2 to $3 back. And so you have to think, if you were pulling out that 8 or 9% cash on cash, you're losing 16 to 24% increases overall, because you're really pulling that out and not putting it back into the property to make improvements, to be able to raise your rents or find that next tenant and significantly increase the value on a cap rate. So what's your exit strategy?
So another great plug for iOS and why I love industrial outdoor storage is multiple exit opportunities. So when you have these kind of low coverage sites, small buildings, or just yard storage even, you can sell to an owner user. So a company can come along, there's a lot of industrial companies, they buy their own dirt. And so you can sell to an owner user. You can lease to a single tenant on a triple net. And then development, that's kind of the final one, is vertical construction. You still have this great piece of land. We've talked about the building in the back that's tenanted. We talked about 300,000 square feet going up there. There's another 500,000 square foot project up on 820. So this whole area is booming, and we would love to sell to a developer at peak market land prices so that he can go vertical.
Well, Ron, this is a really interesting covered land play
Yeah.
you've got here. Thanks for touring us around.
Awesome. Well, thanks for coming.
Buddy. So there you have it for the story of the deal behind industrial outdoor storage. If you are looking to do one of these projects yourself, you want to aim to spend somewhere between $300,000 and $500,000 an acre, and you'll probably want to aim for somewhere around $175 to $225 per space in rent. Of course, you'll want to check your market comps to make sure that it supports that, but if you're able to find a site that checks those boxes, you've got yourself a pretty good deal. And if you want to dive more into industrial outdoor storage, check out this video here on the laziest way to invest in commercial real estate.